What's going on, world? It's me, Andre Cat, not here from West Palm Beach, Florida. So I want to go over this gold trade that I took on NFP. All right, this past Friday, and maybe you can get some pointers or some tips the next time come around when it comes to NFP or CPI. You can kind of trade this way. But first thing first, all right. If you're using AIs, EAs, trading bots, and stuff like that, you do not want to be using those things on NFP or CPI or any red folder news. You don't want to be running any type of trading bots or EAs on those days, okay? Because it's very, very risky, all right? Now, when it comes to NFP, CPI, I'm really looking to trade US 30, gold, silver. Those are the pairs that I'm looking to trade on NFP or CPI. Okay, and there's other pairs that you can look at too that CPI and NFP affect, like USD, JPY, Euro USD, SP 500. Nas 100. Those are something. Even Bitcoin, you can take a look at those. But the ones that I look at is gold, silver, US 30, for the most part when it comes to these days. Okay, and you can make a lot of money. You can make a decent profit off of these days. Okay, so first thing first. Okay, all right. Before I even show you why I took this trade, first thing first, you want to draw your New York session, your previous New York session, high and low. Okay, and what I mean by that is from the time you want to. Let me see. So for this case, all right, this is the high of the previous New York session. Okay, so what you want to do is you want to draw your zones. All right, at the top of the wick to the body. Okay, you see how I have it there? The previous wick to the body. If I even drag this over, right, you'll see that I have I draw it from the zone from the wick to the body. And if you don't know how to draw a zone, all you got to do is click. If you're using the iPad, right now I'm using the iPad, but it's different on the computer. But like if you're using the actual computer, it will actually be on the side, on the left hand side. But in this case, if I click on the little pencil here on my iPad, you'll see the rectangle. That's the one that's the tool that you want to use to draw these zones. Okay, you want to draw these zones just like that. Okay. Now, so we just drew our previous New York session high. All right. Now we got to look for our previous New York session low. All right. And as you can see right here, I have a zone right here that's drawn from the previous New York session low. Okay, and you might be wondering why I didn't draw this from the wick to all the way to the body, because it has a long, long, long wick. There's no point for me to draw a zone all the way up there to the body. So what I usually do is if it's too of a long wick, I just go down a time the time frame. I'll go to the 30-minute chart and see if it's a lot better, and on the 30-minute time frame it's a lot better. Okay, so I draw again. Click on this again. You draw it from the wick to the body. Okay, that's how I draw my zones. All right, from the wick to the body. Now you might be wondering, how do I know if it's the New York session or the London session or the Asian session? Well, um, I have an indicator. I have these indicators on my chart, and don't worry if you do decide to purchase my training and the indicator that I'm using. You will get this. You'll get these indicators. The indicators actually tells you what session you're in. All right. In this case, I have the red. The red candle means that I'm in the New York session. The yellow candle means I'm in the Asian session, and the green candle means I'm in the London session. Okay. So once you purchase the course or purchase the training, Um, and remember, as a bonus, you're going to get access to my trading bots. You're going to be able to copy my exact trades over to your account hands free, and then you're going to get these indicators that's going to help you, um, you know, help you determine what session you're in, and also you're going to get another indicator that will send you alerts that will tell you the actual buy and when to sell. Okay, so don't worry. Okay, but um, so now we have our previous New York session high and our previous New York session low. Okay, and I'm going to even move that out the way so these charts can be clear for you guys to see. Okay, so now when the New York session happens, right? Remember, this is the like over here, like you see the red candles over here, right? You see the red candles over here, right? This is the current, at the time I traded, this is the current previous New York session low and high, all right? But this is, if you go back over here, this is the previous New York session high low, okay? But now we're in the current, at the time on Friday, we're in the New York session, okay? So now what I usually do is once I draw my zones, right? I go to my Forex funds, right? I mean, not my Forex fund, but myforexfactory.com, all right? And if you're going to be trading, guys, you definitely need to be looking at forexfactory.com and seeing what type of news are happening before you start trading, because news can affect the market, all right? And you don't want to be, at the same time, like I said before, you don't want to be using trading bots or AIs or EAs doing red folder news, especially NFP, CPI. You don't want to be running those on these days. It's very, very risky. Okay, so before I start trading, I look at the to be honest with you, I look at the whole week. You know what I'm saying? But you want to see what type of news are going to be happening before you start trading. So in this case, on Friday, I was looking at the NFP. I was looking at the non-farm employment. That's what I was actually looking for. So to determine, all right, if it's going to be bad for gold and if it's going to be good for gold, you look at these actual for the forecast, the previous, and the actual. Okay, so now if the actual, right, is higher than the forecast. In this case, it's higher than the forecast and the previous. Then it's bullish for USD, and it's bearish for gold and silver. It's bearish for metals. Okay, so you should already have the mindset that when it comes to Friday, you should be selling gold or silver. You should be selling. You shouldn't be buying, because it's very, very risky to be buying against this. All right. So if the actual number is higher than the forecast, that means it's bearish for the metals. If this number was lower than the forecast, then it will be bullish for gold and silver. Okay. So hope you guys remember that. So the next time NFP come around, I believe like July. I think July the 7th is the next NFP. Go to forexfactory.com and wait for these news to come out, and look at the actual. If the actual is higher than the forecast, then it's bullish for USD. If the actual is lower than the forecast, then it's bullish for gold and silver. Hope that makes sense. Okay, so now I have my bias when it comes to trading gold. All right, so now what I was looking at here, I was looking at this previous New York session high. It didn't really come in and tap in. Usually price goes into the zones before it goes in your direction. It goes against you a little bit, and then it bounced off of the zones. But in this case, price came down and touched one of my previous New York session high. All right, as you can see, I have a red line right here. What it did was it broke that the horizontal line, broke the New York session high, right? It broke it, and then it actually came back and retested. So this candle broke it. This candle actually came back up and retested, and then that's when the market started going down. Okay, so that tells you that you should get in. Okay, that tells you that you get in, and that's how I trade. So basically, this is one of the ways how I trade. I trade basically off of the rejection off of a zone. So if price breaks a zone, right, and then come back up and retest it and rejects it, then I get in. I get in on the trade. So in this case, let me show you guys. I got in. I got in. Where I got in? Let's see. Let me bring in my short position tool. So I got in about right here. Okay. Got in right there. Um, you could put your stop loss right there. And this right here would have gave you, if you'd have hold this trade would have gave you a 4R on this trade. Okay. Now let's remove this. Now the market is not going to always go straight down in one move. It has to pull back, right? So let's go. Let me go to the 5-minute chart, right? And I forgot to tell you too. Like I usually take my trades based on the 5-minute chart, not the 30-minute chart. So again, if I were to show you on the, and actually, yeah, let me kind of take this off real quick. I can delete that. Okay, let me take this out too. Okay. So when it comes to the 5-minute, right, as you can see, price came all the way down, and then as you can see, I also got a notification from another indicator that I'm using, a sell indicator that I got. I got an alert there, so I could have also took the trade based on that alert, but I didn't. I wanted to see price come come down and retest it. Okay, and like I said, you would have got in. I would have got in right here. Okay, I would have got in, right here in this area. All right. So you could have caught all that. Remember, that's like a 4R, 5R trade right there. You could have got in. Okay, so you could have got in anywhere right there. Okay, you could have got in anywhere in this area. Okay, but we all know the price is not going to always go down in one line. No. So I wrote it all the way down here, right? What you could have did was you could have waited for the market to pull back on you, because remember, 8:30 is when the news happened. If we go back to Forex Factory, the news happened at 8:30. Okay, so at some point the market will have to come and pull back up a little bit. Okay, so you could have waited on the market open. The market open usually at 9:30 a.m. Eastern. All right, and let's see, is this 9:30? And as you can see, around 9:25, almost 9:30 here, right? You could have took the trade up in this area on the pullback. Okay, so price came down, right? Price came down, pulled back, right? And not only that, right? I had drew a Fibonacci retracement on my chart. I'm gonna show you how to do that. I'm gonna bring my Fibonacci retracement tool. Boom. So what I did was, right? Remember, you could have drew your Fibonacci up here, right? And bring it all the way, I believe we could draw it down about right here. Okay. I drew my Fibonacci retracement tool about right there. You guys can see that, right? And as you can see, right, price came down and pulled back to the 61.8. All right, the 61.8 is right here, and pulled back to the 61.8. That's a one of the PR zones that you can get in at. Okay, now don't worry if you don't know about Fibonacci retracement tool. I'll show you how to use it. Don't worry. and show you how to trade with it. But I know if price would have came down and came pushed back, pulled back into the 61.8, and not only that, I got an alert on another indicator that I'm using. All right, it's another strategy that I use with this indicator, but I got an alert right there on the 61.8. Right, that's confluence. That's confluence, guys, and you could have got in right there on that candle. And guess what? You could have caught. If you got in, if you'd have waited for the market to open, you could have got in. I mean, you could have got in right here, right? You could have got in right there, and look at that. You could have caught all of this. Let's see, ladies and gentlemen, that was a 4R trade right there. I mean, if you'd have, you probably put your stop right there. Probably would have made it like a 5R or 6R. So, like you wouldn't be in no type of drawdown. All right. So if you were to before you started trading, right, you knew that news was bad for gold, right? You should already know that you should be selling, right? You should already know that you should be selling, and you put your fibs on the pullback. As you can see, you'd have had price came up to your 61.8 on your Fibonacci retracement tool, and you got an alert right on top of that. That would have been a perfect trade for you to get in. All right, perfect trade. Okay, so that's why I got in on this trade. This is the reason why I got in on this trade, and this is the reason why I made a decent amount of money on this trade in one day. All right, now if you're looking to pass challenges, or you're looking to trade your funded account, like these are perfect days to look out for and watch, because you can make a lot of money if you know what you're doing. Okay, a lot of people say don't trade on news, or the only thing I would say is don't use trading bots, AI, EAs, and that type of stuff on these type of news. But if you know how to trade, you know how to mark up your charts, what to do, then go ahead, trade these. Use proper risk management. Have a tight stop loss and go for it. Take a trade. Okay. And if you you probably would have knew you wouldn't if you didn't have your zones here. You probably wouldn't know where the market is going to be headed. Okay, because when it comes to like gold, US 30, they go from zone to zone, zone to zone, zone to zone, zone to zone. All right, and I'm going to show you guys on another pair too, US 30, how these zones work. But guys, if this zone wasn't here, you probably wouldn't know where the market could possibly reach. And I know where the markets are going to be heading because I have my previous New York session. I'm going to go back to the hour chart. I will see, me personally, I would know where the market is going to be heading to. So the market came down to, so you could have took profit on the first zone here, which is your previous New York session low, right? Like you could have took profit like right here in this area, or you could have took profit right here, okay? Because you got another signal here that says sell, so you could have rolled it down to that second zone. That's this zone. This zone that you're seeing down here at the bottom is my previous week low. I think, is it? Yeah, it's my previous week low. So you could have rolled it down there. Okay, but hope you got some value from that. That's basically how I trade. I trade basically off of my zones, and then also I might throw in my Fibonacci, and do a couple of other things. But other than that, if you're trading NFP, the most important thing that you need to look at is the actual higher than the forecast, or is it lower than the forecast? Because like I said, if the price is higher than the forecast, I already know that the market is going to start falling. And this is a big number too, because the actual was actually not only higher than the forecast, but it was actually higher than the previous. Okay, so that tells me right there the market is just going to drop. It's bad for gold. It's good for US, but it's bad for gold. And I'm going to show you why it was good for gold. I mean, US too. So let's take it to US 30. All right, so now I'm on US 30 now, guys. I'm on US 30. Look at this. Same thing. right? Remember, I told you you want to look at the actual and see if it's lower or higher than the forecast. In this case, if you're trading US 30, um, this number was higher than the forecast. So that means it's bullish for USD. It's bullish for US 30. So if it came to US 30 and you'd have broke it down to the 5 minute, right? Again, let me go back to the hour. Go back to the hour. Again, what you want to do, right? This is the previous New York session right here. In this area, hold on. In this area right here, this is the previous New York session. Okay? So what you want to do, right? You want to draw your previous was this the previous? I think it was the previous one right here. Yeah, no, okay. The previous was over here. Let me see. Let me go to the hour. Let me go to the 5 minute, 30 minute. Let me show you. Let me see where I drew it from. I drew it from there, right? Okay. So an hour. Okay. So in this case, this was actually what was it? Sorry guys, give me 1 second. Where did I draw it from? This is the current. Okay, so okay, let's do it. Okay, so this is the previous one right here. I think this was around 8:39. Okay. So you'll draw your zones, your previous New York session high, your previous New York session low. In this case, this is where it was at, right? So if I bring it down to the 5 minute, let me bring this down. Okay, so this is the 5 minute right here, right? Look at this. Look how perfect this is. All right, so price came all the way up. Right, price came all the way down, right, in this area, right? Rejected the zone, because you see the long wick right there to the bottom. It rejected that, and then it just went straight up from there. So that's why it's very important to draw these zones, because that this is what you're looking for. You're looking for a rejection off of these previous New York session lows and highs. So in this case, the price rejected the New York session low here, the long wick. And then I would have, like, as soon as I seen that rejection, I would have got in. Bring in my long position tool here. I would have got in right here. All right. Matter of fact, I already have a see. I would have put my stop loss just below that zone, and then I would have rolled it to the weekly. You could have rolled it to the previous New York session, which is grayed out right here, the previous New York session high, or you could have rolled it to the previous weekly high, which is the kind of the orange zone here at the top here, as you can see in this area. So you could have rolled it here or here. Okay. Now, let's see. That's bullish. Okay, like I said, I would look at Forex Factory. I would have seen that the number was higher than the forecast in the previous. So I already know, had the mindset that I should be buying on US 30 if I was trading US 30, and it rejected the zone and it went all the way up. Like, this is how powerful it is when it comes to drawing your zones, because if it rejects a zone or breaks a zone, you should already know what's about to happen. And if you're looking at the news on NFP, and you know that that this is bullish for USD, that's confluence. You can add all that up, and you could be looking for buys, and you could have made a big chunk of money on this day. Very simple. All right, same thing. Same thing with let me see. Same thing with SP 500. Same thing. Bullish. You should already know that you should be buying on SP 500 because it's bullish for news. Okay. I hope you're getting the picture. All right. The main thing is just to look at the news. If you're currently trading NFP, this is only for NFP or CPI. Like, if NFP specifically, if the number is higher than the forecast, that means you should be buying USD pairs. And if the actual is lower than the forecast, then you should be selling when it comes to USD pairs and been buying metals and yeah. Anyways, I hope you got some value, but this is why I took the trade on gold. I made a decent profit on gold, and I hope this was a great lesson for you to go by, because next NFP you could be ready. You'll know what to look for. So I hope you got some value. If you did get some value, let me know in the comment section. But if not, I don't know. But until then, I'll see you guys on another video. Take care, y'all.